Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, September 8th. It's 6:37 as I'm starting the video. It's kind of hard to believe, but starting a video at 6:37, I feel like I'm like a half hour late, believe it or not. But let's see what we can figure out. Taking a quick look at futures. Equities are relatively flat. Oil's up 1.5%. Copper's down 1%. The Japan Nikkei is up 0.7 and flirting with the 30,000 level, which is, if you go to the charts of the Nikkei, you'll see that 30,000 level is quite an important level, and kind of could potentially be an inflection point. If it were to break above, have a lot of running room, and this would be a logical place for it to stall or flag out, however you want to look at it. But if you're in that long Japan trade, you may want to keep a chart of the Nikkei handy. And I just want to make a point in your charting. We are in the EWJ, which is the country ETF for Japan, right? You'll notice a lot of times when you have a chart that's tracking a foreign index that it'll appear very, very choppy with lots of gaps all over the place. This is the same thing if you're trying to trade the DAX, or say you're trying to trade BMW, for instance, which is based in Germany. When you have a U.S. instrument to track a foreign stock index or stock, what's going to happen is that those gaps that you see in a U.S.-based chart are artificial. Why? Well, Japan was trading last night, and the futures are a little bit different, obviously. So when, BMW has already been trading for 5 hours, right? So when the U.S. markets open, if BMW or Siemens or the DAX is up, that U.S. thing is going to gap up. But it's not really a gap in the sense that we look at our technicals here, if there was a gap with earnings or something like that. So if you really are into a particular index, you've got to look at the instrument in the country that it trades. So don't get all caught up in, oh my God, there was a gap and now the gap has to fill, and all the things that we would do on a U.S. company on a U.S. based chart don't apply to those foreign-based indexes and stocks when you're trading a U.S.-based index. So I hope that clears that up, or if you were wondering, I hope it adds a little bit to your analysis. We do have a rising VIX. I think it was a little bit over 19 this morning. That's something to really pay attention to. I'll add a little bit of color of that to that a little bit later on. Last night, we had a couple of stocks, COOP, C-O-U-P. You'll probably see a gap up in that this morning after earnings last night. Wasn't a tremendous amount, maybe like 5% that I saw. But the real mover was PATH, P-A-T-H, that UiPath. Dropped down 10 to 15% last night after earnings. And if I'm not mistaken, that's a big ARK holding, Kathy Wood holding. So you may see a little turbulence if you're holding some ARK funds, depending on what the weighting is in her index and all that kind of stuff. But anyhow, those two will set up for either active traders today, or if you prefer, second day bracket trades, which we're so fond of. On the macro front today, we've got mortgage applications, Red Book. We've got the FOMC Williams speaking. I believe it's at 11 o'clock. What's notable there is he's the first guy that I have seen that is scheduled to speak after that crappy jobs report from last Friday. So that may be notable if there's a change of tone or whatever, heading into the FOMC September meeting in a couple of weeks. Then we've got the 10-year bond auction, which I think is going to be very important. We're going to look at the rate chart here in a minute. I'll show you some stuff there. And then the beige book, which usually is a nothing burger, but I think as this COVID thing kind of rolls through the economy, what the beige book does is looks at the regional FOMC districts and looks at the economic picture in each one of those different, the Dallas Fed, the Atlanta Fed, carved up all over the country, and they put together a lot of economic information, and that may be somewhat more revealing than it would on a normal kind of report, given all the turbulence with COVID and everything else. And then on the earnings front, after the bell, we've got GameStop, Lulu, and Restoration Hardware. Those were the three big ones that may be of interest to you. So here we've got the dollar index, and also don't forget, if you're new to the channel, run the video at 1.25x. You won't miss a thing, and it'll cut down the run time. I'm not the quickest guy in the world plowing through this stuff, so I think if you run that at 1.25x, you'll be a lot more pleased. But anyhow, we had a bump in rates yesterday, and we came down here on the dollar, and we got a healthy bounce off this support level that you can see is clearly marked. So now we're back up above the 200. I would key off of these lows right here, put a little alarm in your dollar index chart, or flag it, because the action will happen on a break below. I think as long as it stays in here, things will be relatively stable, and it wouldn't take much for you to use your imagination to see that it looks like we've got 2/3 of a head and shoulder top forming. Here's the left shoulder, here's the head, and now we've got a good start to a right shoulder. If this were to come up and then roll over, then you'd have your head and shoulders top, and then that would, just looking ahead, give a measured move back down in here for, if that were to develop and then play out. So there's always some stuff to watch on the dollar, and like we say, it ties into everything. There's an adage on the street: if you get the dollar right, like, everything starts falling into line for you. And that's why so many people are interested in it and track it. And one last note on this slide: if you're new here, thanks for visiting the channel. I really appreciate it. In the show notes, you'll find a link to the website where you can drop in your email address and register for all my content. And then here's just some added information about that registration. It is a double opt-in. You'll get an email, and then you have to reply to that to be in. And so a lot of people get tripped up on that because of the double opt-in. And also, here's some contact information. You can follow along on social media or drop me a note anytime. I'd be happy to chat with you. Here's 10-year yields. We had 3.6% rise yesterday. I think it was like 4 or 5 basis points. Coming up here, closing out the day at 1.37%. We are in this window of between 1.3 and 1.4%, where I think both of our scenarios or regimes will work, both technology and cyclicals. Although yesterday I was quite surprised, to be honest with you. There were a lot of cyclicals, reopening names, that got crushed. And I mean crushed, like, 3, 4, 5%. And you will have noticed IWM was leading to the downside yesterday. So that kind of caught me by surprise. It started out nice, but then they faded it the rest of the day. And I would have thought that yield rise would have been a benefit to those cyclical names, but it just didn't happen. Followers of the channel will know or see that I've changed the drawing on this and taking off some of the prior channels that I had and kind of have drawn this as a triangle with a little breakout yesterday. Now, I think one thing that'll make that more significant is this 1.4% yield, and you get a breakout there, and then there would be a pretty clear path to 1.5%. And like I say, speed is everything. If it just consolidates and kind of grinds higher, that's one thing. If we've got a 10-year bond auction at 1 o'clock, and that's why watching these auctions or watching the yield or TLT charts at 1 o'clock will be very revealing. If for some reason that auction does not go well and yields spike at 1 o'clock, I think you'll see that ripple through the market. So be on your toes at 1 o'clock, and it wouldn't be a bad idea to have this rate chart or TLT up on your little montage of when you're actively trading. And here's the TLT. You can see on that rate rise, we dropped down and are trading below the 50 EMA. And really, you got the 200 here at 146. And so today it'll be important for that 146 to hold. You get a big plunge below, and then there's not a lot of structural support down here to kind of stop it. And then that's when you get that, turbulence in equities, when you get a fast move on rates and you see bonds really selling off, then you'll see more turbulence in equities. And here's the VIX chart. We've been looking at it periodically. We talked about VIX being down at the lows, a couple weeks, mid-August. When it gets to the lows, there's only one way to go, and that's up. And we got that volatility spike, and then they've driven it back down. And we've been talking the last few days. VIX is down at a level where it really doesn't stay down there for long. And now we're back up. Notice that as the VIX has been rising, equities have been rising as well. So when you see, we're at the highs, right? We're at the highs in SPY. We're at the highs in QQQ. And so that's always a yellow flag when you see people getting, this is a reflection of people buying protection, right? They're buying SPY puts, and that's why this vol is increasing. And also notice here on momentum that all the while, all this has been happening, momentum has been rising, right? So that's bullish divergence. But of course, if you're looking at bullish divergence on a chart of volatility, that's not exactly what you want to see, because this is saying momentum is building under the surface within volatility. So this is saying volatility wants to go up. And, does it have to go to 40 or 80? No. But down here at 18 or 19, it is telling you that there's some buying pressure under the surface, and that's all you can really say about it. And remember, the key is 20. And so if we're 18 and a half or 19 this morning, make sure you got an alarm at 20, because once it breaks 20, you can see that in past episodes of that, there's usually a reach up to 25. It doesn't just go to 21 and die. Once it cracks 20, something's usually happening, and then you get a flash to 25. Now, in the last couple of episodes, that's only lasted a day, and then the dip buyers come in, and so that's been the modus operandi with volatility. So anyhow, let's leave it there. The rise in the VIX is concerning. We've hit the low again. We're on the rise, mark 20, and be ready for that if that does in fact happen. Moving on to equal weight SPY. Down day yesterday, down about 0.8%, coming down here to test the 20, which held. We've got a nice rising channel here. At this point, you just say it's a bad day. Remember, we've got the bearish divergences. What turns a bad day into something more? Well, if you came down here and broke the channel, broke the 20, and then are pressing against the 50 down here at 153, then you got to sit up in your chair and take notice, because the next level, if we were to extend this box out, the prior trading range, you extend that out and you come to 152. On any kind of pull down, you got to hold 152. If not, you're back in the prior trading range, and we've beat that to death. You don't want to see price go back in there. So watch your equal weight SPY, no matter what cap weighted SPY is doing, because that's just, you're looking at, Apple and Amazon and, the big, the top seven stocks. So there was some weakness under the surface yesterday. Moving on to the 2 hour, you can see here, down 0.36. That's hardly even worth mentioning. But it was noteworthy yesterday that some of the dramatic rug pulls that were out there, and even though the large cap names did well. So today, I think you got to key off of 451. You want to see that hold. You want to see this level of support hold. You want to see the midpoint of our rising channel hold, and that all comes together at 451. And if there were an impulsive bar, opening bar, or later in the day or whatever, that just comes right through 451, I think you got to almost pencil in 449. And then once you get to 449, to my way of thinking, you just come on down to 447 and check the bottom of the rising channel, just like we did here and just like we did back here. So as it goes, you lose one level of support, and then it has the potential to cascade a little bit. So I would be hyper focused on 451 and be ready to kind of react to that level, whether you want to buy some protection or lighten up on some of your longs. I mean, we're still bullish. I want to make that clear. But if you're an active trader, you don't just sit by and watch, $5 disappear while you're watching it. You want to be there to be able to react to it. So I think 451 is important on the SPY chart. And of course, the bearish divergences persist. And you can see here that 451 looks relatively important. We've got, support, bunch of support coming back down. We've got a gap. Once you get into that gap will fill. And then here's your first line of defense here at 449.5. But then you lose that, and then you're down looking at 447 with another gap and then another gap. So also notice this void in the chart here, and that's why I say that 451 is going to be important, because there's not a lot of technical support down here. And when you have that, then you look to this next big volume bar, and that's down here at 448, 447. So I think there's the potential for a fast move down there, because there's not any real technical support there to stop it. Qs right up here near the highs, actually green yesterday by 0.5%. We had some really nice moves in Facebook, Apple, Amazon, Netflix, Tesla. So a lot of the big boys were rocking yesterday, and that held up the Qs. So today, I would be keying off of this channel and this level here at 380. And then, as we discussed yesterday, if you were to get a break at this 378.5 level, I would pay close attention, because there's another big void in the chart here, and then you could be down at 374 in a flash. So we're toppy. We've known that. We're keeping our head on a swivel. I'm not trying to scare anybody, but that just reminded me. There was some turbulence pre-market. Now, when I started the video, that pre-market rug pull was recaptured. The bulls bought it up. What you got to do, what I want you to do, is go to the charts that you're trading and mark that pre-market low, whether it's on SPY or futures or the Qs or Apple or whatever. Mark that pre-market low, because what often happens is that those pre-market lows and pre-market highs are revalidated in the regular session. And I would not be surprised a bit if, the gun sounds and at some point during the day, we find ourselves right back at those pre-market lows. And I'm not talking, I think they were down at least 0.5%, if not more. I forgot to take a note on that, but they're down there pretty good. So don't become complacent without you open up your platform and you're right near the highs. Just another day in paradise. There was some there was a pretty deep little pullback in the pre-market. Mark that level and be ready during the day if they want to go down and revisit that, and then don't be surprised if they do. So here's the 30-minute chart. You can see here 382 has been a little problem over the past week. Haven't really been able to take it out convincingly. We're going pretty much sideways. But then my antenna would be going up on a break of this channel, and then it would be going up some more if we can't hold 380 and a half, and then on a break of 379, you've got a big void here, and that would definitely be a place where if that broke, I would be in a tactical short. And depending on how you're positioned, you can take that short earlier if you care to. I think a lot of it depends on how active you want to be, what your positioning is in your portfolio. But you can see here that 380 and a half was support over here. So that's an important level, 380 and a half. But then here's the real level, 379 across here and above this big trading void and this gap. So I would definitely have 379 alarmed in your system for a potential downside break if I'll give you a scenario where that happens. We know rising rates are in general a headwind to tech, right? So things are bouncing along in the morning session, maybe down a little bit, maybe up a little bit, and then that 10-year auction hits at 1 o'clock, and if that thing spikes, you might see that flash move down in technology if there's some kind of outsized spike in rates. So that's just one scenario. I'll throw that out there. It's not a prediction in any way. And here's the IWM. I'll look at it on a 30-minute chart. Let's focus here on the 2-hour. I don't think anything has changed here. I think it's got to recapture this 228 to get back on the right side of the chart as it stands now. I think this is open to 225 on the downside, and then potentially 224. And as we've been talking about, whatever IWM does, it's got to hold 224 to keep this breakout intact. And if it loses 224, then as far as I'm concerned, it's a failed breakout. So kind of a lot on the line for small caps here. You'd want to see that 225, 224 hold, and then get a bounce, and then move up back towards the top of the box. Now yesterday, IWM couldn't have opened stronger. Took a little, that first bar dip, and then they started buying it up. And I was long, and then they rolled it over and faded it the rest of the day. I was not able to participate on this to the downside. Kind of a mental block. So it doesn't just happen to you; it happens to me. And the thing would have been that when this little breakout failed, and then it came back and lost the opening low, that was your cue to get short. And that's what I should have done, but I didn't do that. So anyhow, we're here. I've dropped in a little downtrend line on the 30-minute chart. I think the first bullish move today would be to recapture 227 and then break out from this downtrend line, and then of course recapture 228 and then head back up. But as it stands now, as I just mentioned, the door is open for a move to 225, and then you've got a much bigger level down here at 224. to act as support. If it were me or you, if you're short and you got to move down to 224, I think it would be a smart area to cover that short with your $2 gain. And then I think at the very least there will be a reaction bounce off of that 224. That's a big level. You may even see it at 225 because there were some reactions there as well. So cover that and then look to either get long for the bounce or wait to see what happens and see if it doesn't roll over. Facebook, nice day yesterday. We actually had it all set up properly. Remember we talked about 375, but if you got the tag at 373, that was your cue to get long, and that first bar gave it to you right here at 373. So that was the perfect entry. And from 373 to 382, I mean, that was a $9 move. That will cover a lot of mistakes if you were able to catch that and get a $9 move on an intraday trade. Now you might say, Chris, well, there was a lot going on there. I didn't get that move. That's fine. I didn't get it either. But the point is, if you get that tag and then you see price coming up to recapture 375, that was a buying point, right? We had that level marked. So recapturing a level from below, and then the recapture of yesterday's close would have been a buy, right? You take out yesterday's close from below, that's a buy. And then you had a chance even here at 379 to buy that one and get $4 out of it. So like I always say, if you miss, quote, the perfect opening, don't give up. Don't get down on yourself. Just, where's my next objective opportunity? And then you can set an alarm at that level. And then when that alarm goes off, you can, make your buy and set your stop and get right back into it. Apple, another nice day. We had talked about needing to take out 154.50. That first bar gave you your entry when it came back down below to fill the opening gap and then straight on up. Now today, we've got the high from yesterday as resistance. I think 157.25, something like that. And then your first level of support is where this little flag was down at 156. So Apple is in blue sky territory. No natural sellers. If the market keeps plowing into the large caps, that's going to support QQQ and SPY on the index level, even though there may be turbulence going on underneath. As long as these FATMAAN names are working, that's gonna hold up SPY. So when you're looking at your positioning and what you want to do today, if you're any kind of a QQQ trader or have lots of positions in technology, it's always good to keep the FATMAAN names in focus because, say for instance, you've got a lot of smaller technology stocks, and you say, "Oh wow, I want to put on some protection," and you say, "I'm going to buy some QQQ puts." If they're still buying the FATMAAN names, the QQQ puts aren't going to work. Why? Because they're 40%. The FATMAAN names are 40% of the Qs. So if you see if you see Google hitting highs, if you see Amazon running, if you see Apple at the highs, if you see Facebook running, if you see Tesla running, if you see Netflix running, cues aren't going to work. What you'd have to do there is say, maybe you want to buy puts on the ARK, on Cathie Wood's stuff. Why? Because that's more high beta, higher risk type stuff that would get hit before your mega cap names. So that's an idea for you, depending on what you're holding and all that kind of stuff. I'm trying to throw out ideas that in different scenarios that you may want to explore or think about. Tesla, really nice day. Gap open, jump up here, took out that 750, which was our target, and then flagging here between 750 and 755. If we were to jump over on the daily chart, a break out of this flag would target 770. So if Tesla remains strong, if it can hold 750 today, the target is 770 on a breakout above this flag. Really nice little run here. Fast moves followed by some consolidation, legging higher, consolidation, legging higher, consolidation. So that's what you'd expect to see. And so Tesla looks pretty good here. Can't say the same for Microsoft. It's, dead in the weeds. Not going to spend any time here. Needs to get above 302 to really start making something happen. I don't think it's a short. I just think it's either a long or nothing. If you wanted to explore short, I would alarm this 297.5. You may get a move down to 294, something like that. But as long as the major averages hold together, I don't think you're going to see Microsoft take any kind of big leg down. Amazon, nice day. Came down here, 34.40. Not sure where we opened exactly yesterday. Must have been down here. This 34.70 was a place to recapture and get long. But here's the deal on Amazon. I want you to take note of it. Looks a lot like a double top on the 60-minute chart. Why? Here's your first high. Here's your double top. But what makes it more compelling is the bearish divergence on RSI and PPO momentum. That's typically a signature of a double top when you see price rejected at the same level, but with much lower RSI and momentum. So today, to kind of burn through this situation, price needs to take out this prior high up here at 35.25. Right in that area, take out that high and then move up here. That would invalidate that setup with a new high. But if you see a breakdown below 3,500 and you see broader market weakness, then you may see this move down. And what the double top trigger would be a break of this low, and then your measured move would be from the double top high to this level here, extended down, and just eyeballing it, it would bring price all the way back down to this 33.70-ish type level. So be aware of that. It's at a nice level here from the standpoint. If things stabilize, it can pop it, but you're at a relatively high level. So if you start seeing a breakdown, you could get short with a stop just above and see if you don't get that first leg down into this 34.71 area. Just an idea there for you on Amazon. Google really didn't do much. 0.4%. I don't think the chart has changed at all. I think you want to stay long against 28.70 and look for a move back up to the highs. If you lose 28.70, I think the door would be open down to 28.40. But like I say, you usually want a short weakness, not short strength. Google has been so strong. I think there's probably easier setups out there than trying to, go after Google. But those are the levels if you can trade it as you wish. Netflix, big impulsive move out of the gate. Took out the prior high that we had marked here at 597. Got up into the 613s and had a little pullback. Now, what I've done here is add a trend line just for visual reference, and also giving you the Fibonacci pullbacks from this move. So, as it flags here, or has a little pullback, a 38% pullback is going to be 605, and I think we're like almost there right at that, right at this moment. And a 50% pullback would be 602, and then you got the prior high at 597. So we're in blue sky territory. We're through 600. If you got a pullback and you got the sense that the market was stabilized or going higher, you get a pullback into 605, 602, 600 in that area against this trend line. I think you can take a shot long there on Netflix. Really nice chart, really nice technical action. So that's that one. And then let's wrap it up here with semiconductors. Really flat day, nothing going on. I did see some, decent sized rug pulls in some of the semi names. Not exactly sure why, but we've got a level here at 72.50 that it's got to hold. If it can't, it's going to drop down to let's call it 271, 270 and a half, but then a break there would bring it down into 268. And on the upside, if we break above 274.50, we're in blue sky again. So we're kind of at an inflection point if you can pick that up. Few more yellow flags. We've got those bearish divergences. We've got a rising VIX. We've got rising interest rates. And we've got a big bond auction here this afternoon, and then the 30-year tomorrow. So time to stay on your toes. Time to make sure you're committed to whatever positions that you have. Let's keep our head on a swivel. If I see anything noteworthy this morning, I'll certainly send you out a note of whatever I'm seeing to make sure you're aware. So let's wrap it up there. As always, if you're new to the channel and you appreciate the analysis, hit the subscribe button and the alarm bell. That way you'll be notified of all my content. There's a link to registration in the show notes where, as I said before, you can register for all my content and then have an opportunity to get involved in our trading room. It would be great to have you. It seems to be growing every day, which is great. And then longtime listeners, please do me a favor and pass the link along to your trading circles and Facebook groups and friends and family. They may benefit from the work as well. So have a good trading day. And this has been Chris Buss with Trader's Profit Compass. Talk to you next time.